You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open. I get on here at 11 a.m. Eastern Time, go over the market, share some thoughts, and once in a while we'll even share our trade of the day. I got the chat up on our YouTube. Good morning. Hope everybody's doing great. Oh, cool. Yeah, Jay, my wife went there. Oh, very cool. You're nice and close. Hey, Rick, good morning. Jay, very cool. Sal, Dale, how's it going? A bunch to go over. We are getting close to the election, and hopefully you've noticed those short-term volatility measures are really inching up. So there's quite a bit going on in the market. Not only that, Friday, we have unemployment. So there is a ton of volatility like under the hood in this market. Something to make you aware of. SMCI, super microcomputer. I know many of you guys have this in your long-term holdings. SMCI has been having some major issues. Well, today, SMCI is down another 30%. What happened was Ernst & Young. Ernst & Young was doing the books for the past year with SMCI. Ernst & Young yesterday fired SMCI because they don't trust their books. So the auditor that was going over SMCI fired SMCI because they don't trust management, and that's why SMCI is down another 30%. That stock is garbage. Okay, let's go into the slide deck. If you're stuck in that, I am sorry about that. That's awful. That is not something that we shared. But this is a very real move. This is not just because of earnings. Before we get in the slide deck, we like to talk about vol, VIX term structure, right? Oh, sweet, Craig. It's crazy. Got some Deerfield alumni on here. Okay, guys, listen. This market right now is sitting on its high going into the election. It is so strong. Doesn't it just feel really strong? We have big names coming out with earnings, Microsoft, Amazon. I think this market, guys, is setting up to shoot higher. I am getting more and more bullish as these days pass. Even with these short-term vol indices moving up, we know why they're trading higher. They're trading higher into the election. So pay attention. Q's super strong right now. All right, let's go to the slide deck. What do we got? We're going to look at SKU. We're going to look at oil. We're going to look at copper. We're going to look at IBM. Okay, so if you've been following me for a while, guys, once in a while, I will talk about the CME Group CVOL. So let me just show you how to get here, just so anybody can find this page. If you just go to Google, and then CME CVOL. All that means it's Chicago volatility, CME volatility. So boom, bang that there. And then, boom, you can just go under the data here, CVOL. And that'll take you to this resource, which is so awesome. I love this thing. I use it all the time. So play around with this. But what I want to show you is SKU. This is SKU of oil. SKU of oil is the price when it gets high. It's just the price of calls versus puts. This has spiked going back to April 2022. The SKU spiked again in October, and the skew recently spiked again. Then you should look and figure out when, and this is oil just going back to 2015, look for those spikes because the skew spike is going to be in that early 2022. It's going to be in 2023. Right now, it's kind of spiking again. Oil. Is oil heavy? Is oil going to trade lower? It also, which is interesting to me, if you look at this time period right here and this time period right here, it looks so similar with this 100 period moving average crossing over the 200, 100 crossing over the 200 right here. It looks to be like the same kind of behavior. So something to watch out for. But right now, I'm certainly concerned with oil under kind of this key 77. Oil seems very heavy to me. When we talk about oil, there's two kinds of oil. Just to make you aware, there's WTI, which is your CL. There's also BZ, which is Brent. Usually they move together. Once in a while, they'll break apart. But this is a great way to see, do you want to trade US oil or do you want to trade European oil? Okay? Two different ways to express an opinion in oil, CL or BZ. I'm going to take you right back to those CVOL tools because right now there's a big disconnect between silver and copper. CVOL, this is just volatility. So right now, silver volatility is elevated. Copper volatility is low relative to silver. Right? So you notice that, guys? Notice has silver volatility, and we've been playing for a breakout in silver. Silver super strong, and copper is offered. So what does that mean? Well, if you want to buy options, maybe you consider buying options in copper and not silver right now. Silver skew, just showing again, follow these on the CME CVOL, and when these skew moves, you want to see how that affects the underlying price. Really, really valuable. FCX is a copper play. For those interested, get my pen up here. So again, we have copper volatility is inexpensive. Okay? Silver is expensive, volatility-wise, not direction. We just had a really, really big move in silver. So if you're looking for a trade, FCX, write down, you may consider buying calls. Why would you want to buy calls in copper? Well, volatility of copper is inexpensive relative to silver, and we might want to get long because of this pullback. Pullback right back to the 200 period moving average. Copper has been a good play. There's still plenty of inflation, so traders might consider FCX as a good place to get long. FCX, just showing you another chart. It's not a perfect area to get long. We're not getting a buy signal just yet, like we got down here. But again, we do know that volatility is inexpensive, and traders probably prudent to look for places to get long FCX or any other name correlated to copper. This blew me away. This was so wacky to me. IBM versus FI. What a tight correlation. IBM has been so unbelievably strong this year, but FI has been trailing it the entire time. And up to this point, using this chart, IBM's up 61%, FI is up 83%. IBM is also a name I actually really like long term. And I wouldn't be surprised. This is actually interesting. IBM pulling back. That's really low. Now, IBM wouldn't be a trade. It would be a longer term investment. Really pulling back. IBM is getting darn close to getting a buy and to looking to get long. I don't love that it's 61% in the expected move, and IBM selling off pretty hard right now. But I was just blown away by that correlation between FI and IBM. You never know where you're going to find these crazy correlations. Okay, and this will be our last slide before I move on. Let me show you what I did here. I'm looking at the NASDAQ versus S&P. That's what's the yellow right here. And here we're looking at the NASDAQ versus Russell. Now, in order to do this trade, in order to chart this trade, we need two Russells against one NASDAQ. But now watch what I'm going to do. Let's say we want to play for these two come together. How would we do that? Well, we would sell a NASDAQ and we would buy Russell. The yellow, we would buy the NASDAQ and we would sell S&Ps. Now, what do? Well, cross those off because those cancel one another out. And so if you wanted to play for these two to come back, you would buy Russell and you would sell S&P. Right now, with the market strong, going into unemployment, I like one side of this trade, but I don't like the other side of the trade. In our All Access, we're going to talk about that one side of the trade that I really like going into Unemployment Friday. Hopefully you guys enjoyed this, a little bit different than we normally do, but right now the market's moving. There's plenty of opportunity, especially for those short-term trades. Everybody in All Access, you guys don't go anywhere. Hang tight. We'll be right back.